Hey everyone, it's Imran from Options Insight, back with your macro options spotlight.
Remember, for the algo, like, comment, subscribe, do what you got to do so this information gets out all over the place.
Okay, so stocks having their worst day, US stocks that is, having their worst day in a month yesterday, as bad economic data was suddenly taken badly for a change. Europe and China moves were a bit more contained, and Japan was obviously up on the back of the Bank of Japan non-action that we talked about yesterday. But yeah, US stocks really breaking away from that so-called pin, which didn't really prove to be much of a pin in the end. And I'll be the first to put my hands up and say I didn't call that one. It definitely saw the price action in vol. Looked to me like the market was going to get stuck around 4,000 at least for this week. But you know, the bond market moves, spook markets. That macro data, it doesn't look great, to be honest. And then the rhetoric out of the Fed as well, hawkish as you would generally expect it to remain hawkish. Market hasn't really cared about that up till now. But yeah, combination of all those factors, I guess, is being blamed for the sell-off. I think it's a little bit overdone, but you never know, right? When markets sell off for no apparent reason or kind of counter to how they have been trading, things start to look a bit fishy. So you've got to be careful and manage your risk accordingly. Okay, commodities also gave up early gains as well. So some big bearish reversal candles in some of the major commodities like oil, copper, things like that. And that may signal the start of a period of consolidation. So something to look out for there. In terms of vol, no surprise to see vol bouncing back a bit with what was, fairly big sell-off. So US indices up, half a vol to a vol and a half there. European vols continue to drift lower. And that's just because the realized just isn't there, still in single digit realized for European indices. So, why is anyone going to pile into a load of vol and gamma in Europe when it's not really moving? And then in commodities, we saw precious metals vol come down a bit, energy vols better bid, nat gas bouncing back around 4.5 vols there. Okay, in terms of the dollar, it's kind of stuck at this bottom end, this 102 area on DXY. Dollar yen did have a strong move, obviously, initially on Bank of Japan, popped its head up near 132, got faded pretty damn quick and finished the day only up 60 basis points. So whereas the JGB yields did not reverse in quite the same fashion. So JGB yields got smashed back down to below the cap, back to around 40 basis points. And the BOJ is obviously buying it there and they're kind of like unlimited bid there. So the market say, all right, no point fighting the BOJ here, but in terms of the currency, they still believe at some point the policy is going to change, and therefore they're going for a stronger yen, and they're selling that dollar yen rally back down. In terms of bonds, treasuries had a stellar day, up to 2 sigma on the day, up to 2.4%, as that yield drop in Japan filtered through to global bond markets, and was also backed up by the fact that we got weaker economic data, recession fears rising, things like that, generally supportive of the back end of the yield curve. And then in volatility in these sort of other assets, we have seen FX vols drifting lower still, even though they're carrying pretty well in terms of movement. Obviously, dollar yen vols resetting post the event, down a couple of 2.5 vols or so. TLT vols drifting as well, even though it had a 2.5% up day. If we continue to see moves like that, don't expect that vol to come down anymore. And then in general, sector vols in line with what US indices were doing. Okay, so we mentioned the data. So unable to hold on to this 4,000 strike pin that's been in play from the start of the week, and we suspect was going to hold. We got that macro data out, retail sales, industrial production, all missing expectations. And we see the biggest drop in US economic surprise index that we've seen in a while since October. So that's what we've got here on this chart. So you can see we had positive economic surprises through November and December mainly, but this was quite a big drop here if we compare it to what we've been seeing. So that spooked the markets a little bit. And, like I said, that hawkish rhetoric out of the Fed led to a 1.56 down move on the S&P. So now that we've broken below that 39.50 area, and this is courtesy of Spot Gamma, this kind of these ranges, that they were looking for a vol trigger at around 39.65. So below 39.50, basically, we started to get some movement. That movement has continued overnight. It's testing 3,900 as we speak. It's a little bit below that. So the market doesn't feel in a great place right now. And any gamma that was holding the market at 4,000 has completely evaporated, because if you think about it, the option expires tomorrow morning. We're now over 100 points out of the money. It's got no gamma left on it, right? So the point of pins and gamma into expiry is, if you're at 4,000, the gamma is enormous. If everyone's long that strike, everyone's long loads of gamma. But the minute you get away from it, if you get below, say, 39.50, there's very little gamma, and down at 3,900, there's practically no gamma left, right? So if dealers were long that strike, which we're pretty confident they were, there's just no gamma coming from that strike anymore. So the kind of unpinning that we were expecting to happen after Friday OPEX in the morning has already kind of taken place. And there is no gamma anymore on the 4,000. So they become irrelevant now, basically, right? So we've had the unpinning. We've moved down here. The question is, are we going to continue to accelerate today into the end of the week and into early next week? Personally, I think the market will probably find some support at some stage. Maybe it needs to test 38.50. It's a bit of a level down there. You've also got the put wall that Spot Gamma is saying is down at 3,900, and that did get raised up as we rallied. So again, maybe we find some support in and around this area. Remains to be seen. We put some iron condors on to try and play the pin. Obviously failed abysmally. We'll be cutting those today, basically, to try and salvage a bit of P&L back. Okay, and then lastly, China, with this whole commodity move, commodities reversing their strength a little bit. They've had a great kind of time out of the gates at the start of this year, but China's due to go quiet into Lunar New Year, and maybe we'll see a bit of a lull in activity and some consolidation in that space. So on that point, metals is obviously the thing that's really caught a bid on the back of China, given that they are so dominant in terms of global metals demand. If we look at some of the moves in metals and metals related assets, so we've had iron ore up 50% up here since start of November. We've had the copper miners. Well, I look at Freeport McMoran, that's up 35%. We've got the gold miners index up 25%. We've had the physical metals themselves, copper and gold, up 15 and 20% apiece. And the metals and mining sector, the stock sector, which contains Freeport, but a bunch of other names as well, that's up around just over 10% since November. But actually, most of that move has happened since the start of this year. So like I said, I think going into Lunar New Year, there is a window of potential consolidation. Price action also didn't look great yesterday. So, but I do think the structural kind of move into these names is going to continue as the year plays out and as the China reopening gathers steam. So I do think if we get dips in these things, I do think getting into these things, buying dips in these things is a sensible trade. One way you might want to do that, if you want to generate income as well, is you sell put spreads or put credit spreads, as they're sometimes called, on the higher vol names like XME, where the vols are still in the mid 30s, right? So if you were to get 3 to 5% pullback in these names over the next week or so, that would be an opportune moment to maybe sell some put spreads, bring some premium in, and essentially buy the dip in these assets. Now, on that point, silver kind of stands out. So silver is up kind of in line with gold since November, but it hasn't done a lot this year. So it's kind of been consolidating since middle of December. And you can see that in this kind of choppy price action that we've got here. So unlike the other metals, industrial and precious gold, basically, which have ripped pretty hard since the start of the year, silver has actually been in consolidation mode, and it's kind of hanging around not too far off the lower Bollinger Band. So our strategy compass is kind of saying sell puts or put spreads. That's what's being flagged. Now, we personally think because metals in general are going to consolidate for a bit, that's our kind of base case. I'm not rushing out to sell put spreads right here, right now. But I do think looking at the silver chart, and this is SLV, this thing could get down to 21 or even, 20-ish. And that would be, these are like the consolidation levels from the whole rally, the Fibonacci retracement confluence zones that I like to use. If we get into one or two, or even the second of these levels, then I think the entry point's quite nice to sell some put spreads. All right, that's it for today. Thanks a lot for listening as always, and I will catch you guys tomorrow.